Hey everyone, it's Benny the Finance Dog. Welcome to my channel. Today, in addition to going over a trade, I want to explain another technical analysis tool at your disposal, Fibonacci Retracements. Let's begin. Fibonacci Retracements are a technical analysis tool used to identify potential support and resistance levels in a market. They are based on the Fibonacci sequence, which is a series of numbers where each number is the sum of the two preceding numbers. The most commonly used Fibonacci retracement levels are 23.6%, 38.2%, 50%, 61.8%, and 78.6%. Now, if that sounds confusing and like a lot of math, most technical analysis tools will help you plot these levels, and all you need to know is a pivot high and pivot low to use them. Fibonacci retracements are based on the idea that the price of an asset will often retrace a portion of its recent move before resuming its trend. You may have heard of this be referred to as a pullback, as something continues its current trend. Like most technical analysis tools, there are some drawbacks to using Fibonacci retracements. They're not always concrete support and resistance levels, as often the price of an asset does not always trace exactly back to the Fibonacci levels, or even when it does, it may break through and continue down further to another Fibonacci level before reversing. There's no one right way to identify the significant price move that you will use to calculate the exact reversal point, so you could do well by just monitoring these levels and using them as a point of interest. They're a popular technical analysis tool, but much like all of the tools in our tool belt, should be used in conjunction with the other tools at your disposal. Now, let's go to the charts to review today's trade. As always, we'll start with the daily chart on Apple. And what we saw this morning was basically a continued walk down into what was a Fibonacci retracement level at that 38.2% level. This also coincided with a previous level of support that had been identified in last week Sunday's video, where we had identified some key levels that Apple was to bounce at. Switching over to the 4 and 1 hour charts, I saw that this 183.33 level held pretty strongly during pre-market, and we at open were set to likely bounce off this level of support, which is why I decided to take the 623 expiration 185 calls. I jumped right in them at open and got filled pretty much immediately, a little bit higher than I would have liked, but because I was just trying to get in as fast as possible right at open, I got filled at $68 per contract, and the contracts immediately were green as the move continued as Apple climbed towards 185. So it was a great play. I was able to get out within 5 minutes at $95, which was a pretty significant gain. It was also just helpful for us to have a win after a long losing streak, and a 40%er will definitely set you up the right way. So I was happy with the trade. I was happy that I had drawn my levels and used my Fibonacci retracement tool to identify a strong level of support. I hope you are able to do the same as you are head towards your own trading and use these tools to your advantage. Quick programming note, there'll be no video tomorrow on Friday as I'll be heading out of town, and likely Sunday's market review video will come out pretty late, if at all. We may try to get it out Monday morning right before market open, though we might just save it all for Monday's video. Thank you as always for watching. Make sure to like and subscribe for more content. Woof woof.